Hello and welcome to our look at the MACD indicator. This is the moving average convergence divergence indicator. This has two different parts. It has a moving average and then it has a histogram. Without going into the complex mathematical formula that makes up the calculation, there are a couple different ways to play it, but the most common is for the market to be looked at in ways of momentum. So, for example, one perfect signal is you can see that there is the midline, there it's lower and above. This is zero. And the higher we go, the stronger the momentum to the upside, and vice versa. So, as you can see, the market here in the Euro Swiss currency pair rose during this time period here, and the MACD not only bounced off the zero and the moving average crossed back over the zero, but you can see we started to really pick up steam. The MACD peaked at about here. So that was your first sign that we were starting to run out of upward momentum. Not a huge surprise, really, considering how far we got in such a short amount of time. And since then, the market's been a little less than stellar. It hasn't been bad, but you can see that the next time we made a high, the high in the MACD was lower than the previous high. So that shows that we are starting to run out of momentum, and therefore it's a bit of a sideways market. So the MACD is really good at picking up major shifts in momentum. That gives you the opportunity to start buying calls in this particular case and hanging on to the trade as long as possible and knowing which side of the market you should be in. The MACD meandering around zero like it is shows that we are in a fairly range bound market, and it's not necessarily the indicator you want to use in that particular environment, but it does tell you that in the sense that you're not getting a lot of motion one way or the other. You can see that previously in the downtrend that the histogram and the moving average were both pretty far below the zero level and started to fade back towards zero right about the same time the market bottomed out. So again, this is good for figuring out momentum. This is good for trend trading, following the momentum, and not necessarily for range bound trading. Once you see a break higher, you look at the MACD, you see if we are starting to pick up some steam through the histogram and the moving average. And if so, then that shows you that the momentum is certainly real. There's real buying pressure there. And of course, the exact opposite is true for selling pressure. Selling pressure is true, it's there. As you can see, it was expanding, kept going lower, and then eventually turned back around. As long as you're near the zero line, you know that the market just simply doesn't have a whole lot of momentum in one direction or the other.